Good afternoon, everyone. A warm welcome to the earnings Zoom webinar of Digispice Technologies Limited for Q2 and H1 FY24. We have with us Mr. Dilip Modi, Chairman, Digispice Technologies Limited, Mr. Sanjeev Kumar, Co-founder, Executive Director and Chief Executive Officer, Spice Money, and Mr. Sunil Kapoor, Executive Director and Chief Financial Officer, Spice Money. Before we begin, I'd like to state that some of the statements made in today's discussion may be forward-looking in nature. The actual results may vary as they are dependent on several external factors. A statement in this regard has been included in the result presentation that shall be updated right after this call. Uploaded right after this call. We shall commence the call with the management talking about the operational and financial performance for the period under review, following which we shall have an interactive Q&A session. I would like to now invite Mr. Sanjeev Kumar to commence the presentation. Over to you, Sanjeev.
Thank you, Amit, and good afternoon to everyone. And thank you so much for joining in. Can we have the presentation, please? Next slides. Yeah, can you zoom in, please? Can you zoom out the... Yeah. So what we'll do is we'll follow the same format that we've been following. I'll take a few slides and I'll cover the key business and services update. And then I'll request Sunil, who's our CFO, to come in to talk about the financial numbers. Next slide, please. So on a overall summary, 4 points that I want us to note. First, we continue to be bullish on strengthening our network in emerging India. By now focusing on financial service adhikaris, so we onboarded a lot of adhikari network. Now we want them to become financial services network. And the idea is we continue to drive deeper engagement on ground with a network of 1.3 million adhikaris having presence in approximately 2.4 lakh villages in 6,500 blocks. Second point is we continue to generate a robust financial performance by delivering higher GM, gross margin, and EBIT by 7% and greater than 100% respectively. Third, Spice Money continues to grow other financial service products with increasing focus and contribution from collection, credit, and banking products. I would want you to recall that when we started the network, we were more of the basic cash payments business. And we'd spoken about in the last earnings call presentation. And we continue to stress on that point that how we are diversifying from just a cash payment business to financial services. On the back of fourth point, on the back of higher GM growth, we continue to launch new products. We've launched a banking product with a leading payment bank in October 23. Next slide, please. Like I said earlier, our network today is 1.3 million. As I speak with you today, we're present in approximately 2.39 lakh villages to be precise, in 6,469 blocks. These states represent our density. It does clearly indicate that while we are present in few states and we are dense, but there is still a lot of room of opportunity to increase the network, which we continue to do. Second slide, please. On the key business update, our customer gross transaction value for this quarter has increased 11% from last year on a YOY, but pretty much stagnant or a bit of reduction in vis-a-vis Q1 of vis-a-vis on a QOQ basis, more because of strong headwinds on the APS business. We'll talk about that. However, on the services fee revenue, we've grown 9% to 110 crore in this quarter from last year of 101 crore and 2% on basis last quarter of 108 crore. Service fee GM, gross margin, we've grown 19% from 37 crore to 44 crore on a YOY basis and a 7% on a QOQ basis from a 41 crore to 44. What is important to highlight is as we grow into multi-product financial services business, it is very likely that the GTV growth will not be as significant as the GM growth because a lot of these products will contribute more to GM and not to GTV. And I think that is just a message that I want to give to all my analyst friends today. Next, please. Like I said, we started building Spice Money as a network to deliver basic cash payments business. But how do we move out from just the cash payments to multi-product business is what we are demonstrating and what we've been working at. As we grow the service fee GM gross margin to 44 crore vis-a-vis 37 crore last year. If you look at the cash out business, the cash out business has now become cash in cash out is from 81% to 69%. Again, re-emphasizing the point of how we continue to grow overall GM, but with also growing GM from the new product business lines. So today, collection GM is contributing to 13%. Collection business contributing to 13% of the Q2 FY24 GM. Credit is also increased. Credit GM is now contributing 2% and banking is now contributing 1% to the overall service fee GM in quarter 2. I'm very confident that as we build, these products will scale more. So as we continue to grow our overall gross margin, the contribution from these new business lines will continue to increase. Next slide, please. Let's talk about the 4 big services business lines we talk about. This is the APS, the cash out business. This is what I was talking about. If you look at the GTV, the customer GTV, it's from 13.9 crore last year to 14 crore, which is again pretty much stagnant. But on a Q basis, 14.5 to 14 crore, there's been a reduction. And this is because of few of the headwinds in this business. More of steady state business as in terms of overall offers market seems to be at the same levels that it was last year also. And hence our opportunity here is to continue to increase our market share. And I think that is exactly what we're working at. We are at 17.4% market today and we'll continue to increase the market share. So even at the same offers market, can we increase the business of APS? And that is what our endeavor is going to be. The idea is again, how do we create more financial service adhikaris, deeper engagement, ring fence them, increase coverage. We spoke about a lot of markets where our density is still not there. We need to increase density. We'll continue to do that. For the high performance adhikaris, we've offered a Spice preferred plan. The idea is to ring fence them. The idea is to give them a better proposition so that they stay on a platform and increase business. And the last was what I was speaking about. How do I increase market share in areas where I'm not as strong as I would want to be? That's the way we want to continue to increase our market share in APS, hoping or with a view that maybe the office market might not increase, but can we increase our business with increasing market share? That is our endeavor. Next slide, please. Collection business, as I spoke, today is contributing to 13% of our GM. If I look at the GTV, the CMS GTV, it's grown 59% on a YO basis from a 4,300 crore business. This now become nearly a 7,000 crore business and a 14% on a QOQ. We have over 63 CMS partners whom we work with to deliver this business and we'll continue to build this. On the same collections, the bill payment business, again, seeing a significant ramp up. It's 102% ramp up from what we were last quarter at a 516 crore to 1,043 crore and a 20% on a quarter-on-quarter basis. We have more than 250 billers live on the network for EMI payments. And our idea is how do we work with all of them or most of them to increase the EMI loan collection at our Adhikari outlets. LIC is also gone live, and these are just directional, very forward look, directionally strong business lines, because we believe collections as a business is going to increase, and many of the strong billers are going to come out to the platform if they've not yet come out to the platform. Next, please. Banking, we've done lesser our overall CASA accounts in banking. We've just started to sell about CASA accounts right now and monitor the float. These are the two business lines we started in banking as of now. We opened around 43,000, nearly 43,000 accounts, which is 57,000 accounts. However, the float continues to increase, and I think that's a very significant message on how Spice Money can be a very important player to increase banking, or to reach to banking where banks are not. A clear demonstration of how the float is increasing, which just tells you that there is a banking, there is money in emerging India. We now, like we said before, we are now live with another payments bank, with a leading payments bank, and that should add to the growth momentum in the banking business going forward. Next slide, please. Credit, again, a very important business line for us. Here, I would want to first draw your attention to the first bullet point. Just as a summary recap, we've disbursed over 73,000 loans so far, and from a life cycle basis of value of 222 crores, which just should signify of the kind of business that we've been doing on credit and the opportunity we're sitting here. Today, we obviously, in the earlier days, we were doing more on Adhikari lending. Now, like I had spoken last time, we've started to do Grahak loans, which is consumer loans. So, while the numbers are from 15,000 loans, 15,770 loans that we disbursed last quarter, we've disbursed nearly 17,779 loans. The value of 22 point is pretty much, it's actually 5% lower than last quarter. And I don't know if we will be able to control the loan size, but this is more from a reflection that as you increase Grahak loans, the ticket size also starts to reduce. So this number will continue to increase later on, but I think our focus more is to increase the number of loans. As of now, we are too small as a unit to look at the value changes. We continue to increase the number, and I'm confident that if the number of loans increases, the value will be a significant increase. We're today live with 8 lending partners, and we obviously continue to work with how can we get more and more lending partners, and hence offer their products to emerging India customers. This is again on a marketplace basis. This is not on our balance sheet. So we continue to be a platform to distribute and offer credit services to our Adhikari and to consumers in emerging India. Next slide, please. Yeah, I'm going to request Sunil. Sunil, please, can you take the next few slides, please?
Yeah, thank you, Sanjeev. This slide presents the financial highlights of the Spice Money Limited standalone financials, and on the left-hand side, it's our last full financial year performance to just have a reference to where we are and how we have performed in this quarter with respect to the previous financial year performance. This quarter, our customer GTV though has degrowth by 1%, but our revenue has grown by 2%, and consequently the gross margin has also increased by 7%. And this is due to the product mix, and also primarily due to the rental packs, the subscription packs which we have launched in the last 2 quarters, and which has resulted into a better margin and stickiness of our Adhikaris with us to provide services to the customer. And this gross margin increase of 2.6 crores has flown into the EBITDA straight from EBITDA has improved by 2.6 crores 5.6 crores in comparison to the previous quarter, 3 crores. Because of the indirect cost is kind of stagnant, and that's the operating leverage started to be playing in. And on the EBIT side, we have better by 3.7 crores. There's a one-time income tax refund also over there of around 80 lakhs. Besides that, there is an improvement in the other income also, interest income to the tune of 55 lakhs. We can move to the next slide. This slide represents the consolidated financial summary of the continued business, that's Spice Money and the other particulars of the business, which is not directly attributable to the Spice Money Limited as a segment, and that's why it has been called out separately. This other segment doesn't have any revenue and gross margin. And this is on this side also, that's the cost. If we see in this quarter is 1.3 crores in comparison to the previous quarter is 1.8 crores. So little bit efficiency over here also have been come in. And EBITDA is overall basis is 4.3 crores in comparison to the previous quarter 1.2 crores. And if we see the EBIT side, that is 12.2 crores in comparison to the previous quarters 5.5 crores. So if we see this number on the others item, that's a 2.2 crores, which will have a swing of 3 crores. Primarily, there is a one-time recurring items. One is the sale of a property, gain on the sale of property of 1.6 crores, and also almost 90 lakhs is the interest income on the income tax refunds. We can move to the next slide, please. This slides represent the discontinued operation summary, which is that's in the last in May 23, we have discontinued the operations of Digispice business, and in this slide, in this quarter, we have a 7.2 crores of negative operating profit. Some write-offs in the total expenses are there, and consequently there is a 7.7 crores of PAT loss for the discontinued operations. Just for a reference, that this discontinued operations, what we had called out in the earlier calls also, that we are hopeful that by 31st March we'll be discontinuing this operations. Discontinued operations will be kind of closed, and it will not having any impact on our financial results. Next slide, please. So these the further slides on after this slide is these are the annexures which can be referred by the investors, that gives about our business model and other features that can be referred. Thank you. Amit?
Thank you, Sunil. We shall now have the Q&A session. Anybody who wishes to ask a question may please raise the hand. You can also ask a question on the chat window. We shall wait for a moment while the questions queue is building. The first question is from Rishu Dhawan. You may proceed, please. Concall, request you to unmute Rishu. Thank you.
Hi. First of all, congratulations to the management team on very good results. That is what, as an investor, we are hoping for. What I see is, yes, there is an improvement in the margins of the Spice Money business. My question is, on the way forward, do we see the margins sustaining in the Q3 and Q4? That is number one. And number two is that, as we focus more on the Spice Money business, do we see any strategic investor coming on board? Do we see fundraising happening for anything? Any big plans on the mind? I would like to maybe hear from Mr. Modi that, okay, way forward when we are focusing more on this Spice Money business, is it that we are focusing more on the products which Sanjeev very nicely explained that, okay, we expect the margin and the business to grow up, or there's something else we should hope for in the coming times?
Thank you, Rishu. Good afternoon, everyone. Thank you for joining the call. Rishu, maybe I'll just let Sanjeev and Sunil comment on the margins point, but effectively, if you look at our business over the last 4 years, Rishu, and some of the numbers, if we can just perhaps put up the slides once more, if we could just share the P&L of Spice Money, if you could just put that up, please. I just want to go back to that slide. Can the team do that? So, Rishu, if you see, effectively our take rate has been more or less, holding over the last 4 years. And that's been the fact that if we look at that P&L slide, right? I just want to go there just for reference. Yeah, sorry.
Go back.
Slide number 30.
Go back.
Yeah, just 2 more. Yeah, just there. So if you look at the last 3 columns, Rishu, right, where we talk about our service fee and revenue and gross margin, take rate, and you see the numbers as basis points we've been holding. So what's happening is, Rishu, adding more product lines, as Sanjeev explained, beyond the cash payments business, which is around collections predominantly and moving into credit and banking. Cash collections has very similar margins to our cash payments business, very similar margins. And as we look at credit and banking, the margins obviously improve because they move beyond just GTV to actually product-wise margins. So effectively, I think we have an opportunity. However, having said that, I think as you see, APS industry is actually degrowing. It's not growing. So we are trying to consolidate market share there. There are not much pricing changes, but we are definitely trying to focus on high transacting Adhikari counters to drive transaction shares. So there'll be some impact on margins there. So effectively, if you see the numbers here, Rishu, 45 basis points, FY20 on service fee revenue on customer GTV. As of Q2 this year, we are at 40 basis points. And similarly, service fee GM on customer GTV, 13 basis points, FY20, Q2 FY24, it's about 16 basis points. So I think the idea is that effectively how we, how margins are actually held as we've grown this business overall. So I don't see, much happening on margins in terms of shifts. Of course, as we move into banking products, I think we have an opportunity to look at a different set of margins. And I think if you wait for a couple of quarters, Rishu, that will start playing out, in terms of the margins itself. Sunil, you want to just add anything on that before I take Rishu's second question along with Sanjeev?
So, as you said about that, the sustainability of our gross margins, we have improved over a period as we go for new products additions. So, in effect, we say that we can say that we will be sustaining these gross margin going forward also.
Yeah. I think, Rishu, on your second question, which is about the larger picture of fundraise and how do we look at the business going forward, Rishu? I think one thing is very clear to us that we do have an opportunity to build out our network, not just in rural India, but also in what we are now beginning to call as emerging India, Rishu. Because as we are getting into areas around credit and banking, we realize that banks are rolling out bank branches aggressively, but there is still unmet credit needs in tier 2, tier 3 markets, which is different from rural, which is more tier 4, tier 5. So one of the things that we are looking at is how to expand our network into more tier 3 and tier 2 also, and work with banks to also distribute credit and other banking products in those markets, both secured and unsecured, linked to their branches, especially for secured products. So I think right now our focus is on growing our current business, driving operating leverage, but investments continue to happen as we look at new products. As far as fundraise is concerned, Rishu, I think we will come back to this question maybe a few quarters later once we see the business model stabilize around not just being an APS-centric business, but maybe a few products that are driving the network. Because I think investors would like to see the certainty of growth, which is more diversified rather than concentrated. Plus, I think as we move more into tier 3, tier 2 markets, I think the profile of consumers also we are chasing will also change a bit. And therefore the ability to drive up, both CASA business as well as credit business will improve, and we'll be able to demonstrate that through numbers. So I think, we are hoping that with all of that, our ability to, reach out to the right set of, strategic may be better at that stage. Issue. Sanjeev, you want to add to anything?
No, Dilip, I think you summarized it well.
Yeah. Rishu, any other points from your side?
Thank you very much. All the best.
Thank you, sir.
Thank you, Rishu. Just as a reminder, anybody who wishes to ask a question may please raise hand or write a question in the chat box. The next question comes from the line of Marshall Louis. You may, Concall may please unmute Marshall's, please.
Yeah, my question is that, this quarter we can see our healthy, profitability. So is there any one-off item, or are we going to sustain this kind of absolute profitability? I'm saying, I'm not asking for this EBITDA margin. Like, for example, here we have EBIT is like 12 crore rupees here. So going forward, shall we have the similar, or shall we also increase it further?
Sunil, you want to answer that?
Yeah. So in EBIT, if we see that there is a one-time items, we have called out that it's having a 3.3 crores one-time item. Almost 1.7 crore is with respect to the income tax refund, and rest is 1.6 crores, which is from the gain from the sale of property. So 3.3 crores is a one-time item. Rest is recurring in nature.
No, I'm talking about 12,120.16 figure. Because tax coming is because tax refund is coming after this. So like that's not included in the number of 12 crore rupees. Whether anything is included in the other income or not?
Yeah, this other income is there. Other income, I mentioned it out that other income includes interest income on the funds what we have as a treasury income. There is an other income that's a recurring in nature. There is also a growth in that with respect to almost 55 to 60 lakh rupees. But as I mentioned it, in other income, there is a 3.3 crores line item. 1.6 crore is a gain on the property gain, and second is the 1.7 crore is the income tax refund interest.
The income tax refund interest is pretty where? Like in the other income, right?
Yeah. So that is coming as a part of EBIT number.
Yeah. Okay. So, but like correspondingly, we also 210 lakhs toward this one time non-recurring consultancy charges. So it's almost equalizing.
So 2.1 crores of that's a one-time item which has come under the exceptional item. That's a consultancy cost what we have incurred.
Okay. So you are saying that like 12 crore includes how much you said? Can you repeat please? 3 crore or how much?
3.3 crores.
3.3 crores. So it's like 8.75 this. Okay, this is number one. Number two, like going forward, like shall we have this our EBIT in the range of 8.7 or shall we increase it further?
As I mentioned, and what Sanjeev has mentioned, that about that the new products we are working on and launching it and scaling it up. So hopefully that's the operating leverage will be play out. We are hopeful that it should grow.
It should grow. And like this existing, this revenue majorly is coming from which sector, like this Adhikari sector or this other new product we are talking, and what is the room to further grow? And like how can we see, for example, the growth in or the working in October in the current quarter vis-a-vis the September quarter, for example, in the existing business?
Sanjeev, you want to take up this? The business growth in the O&D quarter vis-a-vis in the September quarter.
So I think fundamentally like we said, we continue to remain scaling a business. The first point, like we said, is that there's an EPS business which we've been the starting point of our strategy. And that business overall offers market is not increasing. We continue to focus on increasing market leadership, and we'll continue to work on that. And that is to increase our income and business, overall business from APS. The other three business lines are new. Collections is obviously already showing. All three of them are showing growth. So our opportunity is on the same network, can we increase these three new business lines? And I think as they scale up, they'll contribute to more income. And that is what will reflect in our EBIT numbers.
Very good. But like your presentation PPT is not available neither in your website nor in the exchange announcement. So can you please ensure that next time, like this PPT is submitted well in advance to this phone call, please?
Sure, that's a good feedback. We'll take that.
Okay. So any other like opportunity we are looking for the going forward, for example, after a couple of quarters, where do we see our business like what kind of growth like we are looking at?
See, I'll tell you, I think the fundamental point that I think I would request all of us to see is emerging India the opportunity for India growth? I think that's the first point. Second, in emerging India, is financial services, the lack of financial services an opportunity? So if you break emerging India population in roughly about 900 million, we believe that there is a 400 to 500 million consumers who are bankable, insurable, creditable. But the financial services infrastructure is not able to reach them. We believe at Spice Money that we are able to create this network using technology. We can be the platform to reach financial services to these 400 to 500 million. I think that is the opportunity we are chasing. So that, when you take a vision of where we will be, I think this is the larger opportunity. We believe that in the market that we are in, we are well positioned because we have a large network. Now, how do we execute on building more and more products? I think that's the execution capability that we need to demonstrate, to be honest. We've tried to demonstrate from few products. I'm sure we'll continue to work on more and more. And I think that those are signs that will start to reflect on the numbers. But strategically, this is the way we are moving.
Very good, sir. Very good. My last question regarding this hiring of this consultant for which we paid 2.1 crore rupees. So whether the advice or consultancy services provided by this, has it been really useful for our business, restructuring our business, or what kind of payback we can get from this one? Because 2 crore is a substantial amount considering our profitability.
No, sir. So actually what we did is a very interesting point. What we did is we onboarded BCG. Right? Well, we'd spoken about it also. It was not 2 crores. So BCG had been onboarded BCG to work with us to help us redefine our strategy, make a blueprint of the way we want to build Spice Money. So like I said, we grew Spice Money over the last 3 years on building this network. But the question was, how do we look at the next 5 years? What are the opportunities we should chase and how do we chase them? That's where we got BCG, and I think that's been a very, very good experience for us. It's been a good learning for us. And I feel that as an organization today, we are far more confident in our execution strategy. We've been able to define that and how we want to build the next 5 years. So that's what we've been able to take away from this experience of working with BCG.
So means amount paid to the BCG was, was productive, we will say then, right?
Yes.
Okay, sir. Thank you so much. All the best.
Thank you so much.
A reminder again, if anyone wishes to ask a question, please raise your hand or you may write a question in the chat box. The next question is from Hina Parekh. Hina, Concall, please unmute the line of Ms. Hina Parekh.
Hello.
Over to you, Hina.
Hello.
Yes, we can.
Yeah, you may proceed, Hina. You're audible.
I just wanted to know what is the strategy for growing CASA and credit going ahead, and how do you see the growth panning out in quantifiable terms?
So Hina ji, we believe that there is a significant demand for banking. Like I said, I don't know if you heard the last when I was speaking earlier. I think just to bring back your attention, there's a larger opportunity. We believe that in this space of emerging India, there is a segment, the population is about 800 to 900 million. We believe 400 to 500 million of this segment is bankable, creditable and insurable, which means there is an opportunity to provide financial services to them, but they do not get it. There's a problem of lack of access because the financial services, the banking infrastructure is not able to reach to them. We believe using technology and integrating with these financial service players, we want to provide those financial services there. Under that, banking, starting with CASA. CASA is actually a start of a banking relationship for us. Opening an account is a start of a relationship. We want to move to building deposits. We want to build to how do I enable the consumer to make a fixed deposit with me, a recurring deposit with me? How do I get him to save money with me? All of that is a journey, but we want to start with banking. So we believe, from our own experience, we believe there's a huge opportunity for that. There's a huge demand. So that's my answer in one. I think credit is, as much as I would say it will be lesser than the opportunity. All of us know there's a huge demand for credit. And we're already seeing, I think the challenge for us is on how we can execute our credit opportunity. How are you able to seamlessly offer credit products to consumers in rural India? I think that's the challenge and opportunity on credit, but the opportunity is huge, Hinaji.
And I think, Hinaji, if I could add to what Sanjeev said, I think overall, the aspiration to have a bank account as well as the overall drive of us as a country to move cash to digital is driving the need and desire to have accounts, from even customers looking for subsidies in rural India and semi-urban to even, small medium enterprises looking to disperse their salaries into accounts rather than cash, because it leads to other benefits, including credit, is leading to a huge demand for accounts. And with our strategic banking partners, we've created a very simple Aadhaar eKYC based both current account and saving account opening journeys. So definitely there's an opportunity, Naji, as we move from an economy from a cash to digital point of view, to open more and more accounts and encourage people to transact using their bank accounts. So I think both in terms of product that we've taken to market, as well as the appetite of the market to want accounts, I think it's a match. And the idea is that, we have to do it carefully. We have to make sure that, the right accounts are being opened in the right areas in consultation with our banking partners. So it's a journey that we are on. And like Sanjeev said, it's a starting point of our relationship with the customer, where once he opens an account, we start working with them to see how to start using those accounts to grow income levels. Because eventually our goal is to ensure that it's not just about having an account, it's about being able to use banking to drive income levels. And that's the goal that we would like to see as an integrated financial services platform going forward.
Sure. Thank you, sir.
Thank you, Hina. Rishu has a repeat question through the chat window. Anything management wants to share on the outcome of BCG engagement? Also, it was purely consultancy and job is over, or BCG will also assist in other ways to take specific product live?
Sanjeev, you want to touch on that?
Yes. Yeah, sure. So I, like I said, Rishu, BCG, the engagement with BCG was primarily to define the strategy, work with us to define the strategy for the next 5 years. I think that was very, it was well required because the way we've built Spice Money over the last 3 years, and how do we see the opportunities ahead. And I think that definitely has fine-tuned. So like we said, we were more on rural, but one of the big outcomes that came on is, that why should we focus on semi-urban and rural, which is the emerging India opportunity. And that's a significant opportunity. So we defined markets where there's credit, savings, even commerce opportunity. Those have been called out. So, the strategy, the execution has got fine-tuned. The products that we want to go out in these markets have got fine-tuned. So we believe, Rishu, now that at least we have a very well-defined strategy that we need to execute. I think that's the biggest outcome that we have. As of now, that's the engagement with BCG. We continue, obviously, however, to work with them as a knowledge partner and, thought partners on how we work. We both, invested in building the space together.
Yeah. So there's another question from the chat window. This is coming from Anush Parmar. Which are the banks, NBFCs, and other service providers that we have tied up with? Any prominent names?
So in the banking account opening space, we are opening these Aadhaar eKYC based current and savings account for Axis Bank. So they are, as you know, one of the larger private banks in India. So we are opening both current and saving account products for them. So in fact, some of the numbers that we showed on the slide was predominantly for Axis, and as Sanjeev and Sunil said, we're tying up with other banks as well, but that's a prominent name in terms of partner whose products, especially on the savings account that we have started. Sanjeev?
Oh, that's it.
As a reminder, if anybody wants to ask a question, please raise your hand, or you may ask the question through the chat window. I'd like to repeat again, if anybody wants to ask a question, please raise your hand, or you may ask a question through the chat window. As there are no further questions, I'd like to now hand over the call to Sanjeev for his closing comments.
So thank you, everyone. Thank you so much for joining in. Like I said, I just want to summarize in 2-3 lines. One is the opportunity of financial services in emerging India is a very, very big opportunity that we see. We stand at a unique point of having ability to solve for this 400 to 500 million consumers in emerging India, and that is what we're excited. So we're very, very keenly building the institution to be the integrated financial services platform for emerging India. Thank you so much for joining in. Look forward to the next quarterly call.
Thank you, everyone, for taking your time out on this busy day and being a part of this remarkable journey that we are seeing transforming into. Thank you again. And now you may disconnect the call.